After this video, your win rate will skyrocket when trading demand and supply zones, because I'll be showing you some zones that don't work and the zones that work. Okay, because I want you to avoid those zones, avoid the zones that don't work and start focusing on the zones that work. I'll be showing you the characteristics of zones that work and the characteristics of zones that do not work. So this is one video you must view from the beginning to the end, because every part of this video is important in order to give you a high win rate while trading demand and supply zones or order block. This is your normal market structure. All right, yeah, this is a bullish market structure whereby the market is making higher highs and higher lows. Okay, and you have your break of structure here, break of structure. All right, break of structure to the upside. And you know what we trade as demand and supply traders? We trade the mitigation of zones. Okay, and so in this case, this is a bullish market structure, so we are trading the mitigations of zones. So these are demand zones. Demand zone number 1 here, this is demand zone number 2, demand zone number 3. Okay, so we look to take trades from either of these zones. So my question would be, where should be the right zone you should take your trade from? All right, where should be the right zone that you're going to take your trades from? Should you take your trade from zone 1 or zone 2 or zone 3? Okay, because actually we are waiting that price should come to one of the zones before we can take our trade from. And most likely, most times we take our trade from this zone. Okay, the first, there's this zone 3. Okay, the zone 3 here. But in most times you could be waiting for price to come to this zone, and price would just smash down and mitigate this zone. And if you had entered a trade from here, your stop loss will be raided. Okay, this is why I'm making this video, in order to help you to understand the right zones to take trades from in order to increase your win rate. This is the flip side, the supply zone. This is zone 1, zone 2, zone 3. Which one should you take trade from? So most likely you would want to take trade from here. Okay, from this point, and sell down to this point. These are break of structure to the downside, break of structure to the downside, break of structure to the downside. That is BOS. Okay, and then you might be surprised that the market might ignore this zone, and you may have entered a trade from here and the market could ignore this zone and go to mitigate the second zone. So what indeed are the criteria that determine where the market is most likely to mitigate? Like, I look at what I'm saying here in the demand, for the demand scenario, market could just break your zone, break this zone and go to mitigate here and take up the buy from this second zone. Okay, and for the sell scenario, the market could just ignore this zone, even though you have entered the sell trade, and go here and take a sell from that zone. So these are manipulations. Okay, these are manipulations by large financial institutions and the central banks and hedge funds, and they do this by the process of what is called inducement. And these inducements are what they use to deceive retail traders. So they actually manipulate the market by giving you false zones, all right, fake zones that appear as going to be a real zone. And when you get into the trade and you discover that you've been trapped, and then your stop loss will be taken out. So that is why I want to help to explain this to you, so that you won't be a victim of this any longer. So what is inducement? Inducement is a manipulation of price of a currency pair by large financial institutions to deceive small retail traders by creating fake supply and demand zones with intention of trapping them and to take out their stop losses. Okay, so that is inducement. So you need to avoid inducement zone. For example, now here there was some sort of break of structure here, there was a break of structure here as well. So ideally you could be looking to take trade from this supply zone here. Okay, looking to take trade from here, but you discover that several times this could just be an inducement zone. So the market most times could blast through and rather mitigate the extreme zone and then sell down. So this is an inducement zone. So you need to know what are the characteristics of inducement zone and what actually are the characteristics of the real zones that you should be taking your trades from. If you understand this concept, I bet you your win rate will skyrocket so tremendously. If you understand this concept of inducement and know when to identify inducement, avoid inducement zones, and how to know the real zones. This is the latest break of structure, all right? And so most times we'll be looking to take trade from this point, All right, market wanting the market to come to this zone, mitigate this zone, give us an entry confirmation, and now take a sell trade from. But you can see in this case that the market blasted through and went to mitigate the extreme zone. So latest lower high, and after the break of structure is usually an inducement zone. Okay, so this zone here is mostly an inducement zone, which is the break of structure, the latest break of structure that happened in this trend. Okay, this is the latest break of structure that happened in this trend. So most times they are mostly an inducement zone. So market would rather most times go for the one before this one. Okay, this is the latest zone, latest supply zone, and this latest break of structure. So most times price always ignore this latest break of structure and go for the one before, and uses this inducement zone as a liquidity. All right, so you need to take note of that. That is one consideration you should pay attention to when you are talking about inducement and when you want to get the right zones. And so here as well, in the buy scenario, you can see that the market created higher highs and higher low, higher high, okay, having a break of structure, higher high, next higher high. All right, created another break of structure. This break of structure number one, break of structure number two. All right, you need to understand that for here, this is where most people will be looking to take a buy trade from. All right, because that is the latest break of structure. But then in most times, market will demand zone created by the latest break of structure. Price will most times ignore this and go to the one before it and mitigate it for a buy. You need to be careful when taking trade from the latest supply zone created by the latest break of structure. All right, and also you need to be careful to take trade when from the latest demand zone created from the latest break of structure. Price most times would go for the one, would mitigate the one, the zone before that one, and use this latest one as a liquidity. Okay, 5 criteria that you need to look at. If you follow these 5 criteria, your win rate will drastically skyrocket when trading demand and supply zones and order blocks. Okay, and it help you to differentiate between inducement zones and real zone. The first one is that was the zone formed from inefficiency or imbalance. Okay, I'm going to show you soon in the chart. Okay, you need to understand that zones that are formed from imbalance or inefficiency, or what you call the FVG, they have higher probability. Second criteria is, was any liquidity taken out before the zone? Okay, most times zones that do not have liquidity before them, most times those zones could be used as liquidity. Liquidity serves as fuel for the market. Liquidity serves as impetus, energy for the market, for a move to take place. So if there are liquidity before a zone, that zone's probability will go up. All right, the third one is there an extreme zone? Most times extreme zones have a higher win rate than zones that are not extreme. Just as I told you, most times recent break zones created by recent break of structures have lower win rate than zones that occur just prior to them. Okay, zones that occur prior to the recent break of structure have higher win rate than zones that are just that were just formed by the recent break of structure. That is important. I've just explained that. Also, does the zone exist on a higher time frame? Sometimes you will see a zone on a M5 15 minutes time, and when you step up to like 30 minutes time frame or 1 hour time frame, that zone is not in existence. So if you step up to higher time frame and you cannot still see the zone that you saw on a 5 minutes time frame or 15 minutes time frame, most likely that zone would have a very low probability. So a rule of thumb would be, when you see a zone on 5 minutes time frame or 15 minutes time frame, try to step up to higher time frame like 30 minutes and 1 hour time frame to confirm if there is a bigger zone that gave birth to this smaller zone on your lower time frame. If that happens, then that zone have a higher probability of working out. But if there is no corresponding higher time frame zone, okay, in where you just saw your lower time frame zone, then there's a probability that zone might not work out. Then finally, and this is the most important factor, okay, you need to check whether you can see entry confirmations when price comes to the zone. So if you see, for an inducement zones, most times price will just blast through it without giving an entry confirmation. I will explain all this soon in the chart. Okay, so for inducement zones, price most times would come to it, blast through it, no entry confirmations. And when we're talking about entry confirmation, we're talking about change of character and return to order block. So these are our entry confirmation. If you find a change of character on on any zone, even if it's the most recent zone or the extreme zones, price would most likely trade in your favor. Okay, your entry confirmation is your last line of defense. Okay, your entry confirmation is your last line of defense in considering the zone you're going to trade. When you have applied all of these and you now have no entry confirmation, then that trade is not going to work out. Okay, now let us see. You can see in this case now, and this is a there was a break of structure right there. This is a break of structure. This is another break of structure. Or ideally, you ought to have traded this zone, have a change of character, and trade this zone right down there. Okay, but then you can see that the market blasts through this zone. This is the most recent zone. Okay, this is your extreme zone. So the market blasts through the recent zone, went to the extreme zone and mitigated it and sold down. So this here becomes your inducement zone. All right, it became your inducement zone. The market, there's actually an FVG here. All right, there's an imbalance here, no problem. This is okay, these are okay. There's an imbalance or FVG, no problem. But then you discover here that two things you find out here. There was no liquidity here to be taken out before this zone. Okay, there was no liquidity to be taken out before this zone. So in that case, this zone, inducement zone, became the liquidity that was taken into this zone. So always look for liquidity. Here there was no liquidity taken out before price came to this zone, and so this zone did not work out. All right, and also you can see that there was no entry confirmations here. The market just blasted through the zone, so no entry confirmation. This is very, very critical. And so this is an inducement zone. It became the inducement zones. Most times will become liquidity. Inducement zones become liquidity for the main zone. All right, this is the real zone in this case. Very, very important. All right, let us see another one here as well. You can see that you might want to take trade from here. All right, because there's a break of structure right there. There's another break of structure. This is like a valid zone. All right, this appeared like a valid zone, but you can discover that why this market did not work out, why this trade did not work out from here, is that there was no liquidity taken out on the line of that trade before the zone. No liquidity was taken out, and number two, there is a double top. So this inducement came with double top liquidity, all right, which had to be taken out into the real zone. Okay, but had it been you saw like some form of liquidity here, okay, like you saw some form of liquidity here before price went to the zone, most likely this zone could have worked out. Don't avoid trading zones that do not have a liquidity run before the market gets to the zone. Those zones most likely become inducement zones and will be taken as liquidity into the main zone that would now work out. This is very, very important that you look at this and take note of that for your success. Okay, now let's see the buy scenario. For the buy scenario of this, you can see here that this is a break of structure. In fact, this is another break of structure. These are break of structure right there. Okay, now but you can see here that the market converted all of these, converted all of those into liquidity. Okay, mitigated this zone because there was some liquidity here. These are liquidities that were taken out before the zone. So you can see that this zone worked out. Okay, this zone actually worked out in this case here. All right, so but then this zone here, this zone did not work out. This zone here did not let that work out. You can see there is a break of structure to the upside. This zone didn't work out here. This zone didn't work out here, but this zone worked out to give us this move here. But this one here did not work out because you can see there was no liquidity taken out before the zone. See, the zone did not really have some sort of inefficiency or FVG or imbalance. So the market now decided to give the retailers a piece of the cake. Okay, the market moved up a little bit, give the retailers a piece of the cake. So you can see stop losses placed. Stop losses were placed right there, and now the market moved a little bit, gave these retailers a piece of the cake, ran out their stop losses into the main zone, and now took this trade up. Okay, the market now rolled up into this point. Okay, so you can see this is very important here. You can see that this zone was mitigated because there was a liquidity here taken out into the zone, but this zone later on mitigated in a false move. Stop losses placed, raided into this zone, and now the institution did a long buy. Can you observe the propensity at which this market moved up? Okay, you can see how these candles move so hard, so much, because there is a huge liquidity that we are taking out. Stop losses, these stop losses we are raided, all of these liquidities we are raided, and once liquidities are raided into a zone, the zone most likely work out, and it buys or sells with a high level of magnitude of momentum. Okay, see how those candles, just few candles up, 1 2 3, this is 1 2 3 4, just with 4 candles the market just rose up so fast. All right, so that is to show you the power of liquidity and the power of taking the right zones, trading the right zones, and the power of having liquidity before your zone. All right, let's see one more example here. Before I proceed with this video, please, if you're yet to subscribe to this YouTube channel, please kindly do so. All right, join our free Telegram community. The link is in the description box of this video. Give this video a thumbs up if you're finding value from it. Comment down below to let me know if you found value from this video and more other areas of for trading you want me to make videos for you. If you want me as well to take you by the hand and help you to become a profitable trader, I can help you in my one-on-one mentorship course. All right, and after training you and after helping you to exposing you to the market privately, I so much believe that you're going to see success in no distant time in your trading career. My contact detail is in my free Telegram community, and the link to my free Telegram community is in the description box of this video. Okay, now you can see in this case as well, this is a break of structure to the upside. This is another break of structure to the upside. This is the first break of structure to the upside, second break of structure to the upside. In fact, here as well, because this market took all this one, there's a break of structure here as well. So, but then you can find out that all of these were raided. They became trend line liquidity for the market to blast through into this zone. All of these are an inducement. Okay, these are an inducement zone. They all became inducement zones, and you see that the market did not respect them. Even this one here as well became an inducement zone as well. They're all inducement zones, and the market blasted through because of this trend line liquidity. Okay, trend line liquidity blasted through into the real zone, and the market bought from there. Okay, so you need to watch out for liquidity before your zone. Once there is no liquidity before your zone, you know that that zone is very unlikely to work out. And when your zone does not have some form of imbalance, your zone might not work out as well. All right, and then you need to look for some entry confirmations before when price comes to your zone. All these will help you to be able to trade the real zones and help you to have a higher win rate. It's my pleasure and desire that you win most of your trades and make money and become profitable. So if you found value from this video, do not forget to subscribe to this YouTube channel and give this video a thumbs up. Let me know what other kinds of content you want me to make, and join our free Telegram community for free setups and analysis that will help you to become profitable in your Forex trading career. And if you want me to mentor you, please contact me and I will help you and take you by the hand to become better in your trading, regardless of how long you spend in your trading career. So till I come your way next time with another useful content, do have a wonderful day ahead. Bye.